let's talk about the current state of play. It's not really $3.5 trillion that we are expecting right now, but it's not exactly $1.5 trillion that we are expecting either. What exactly is the compromise going to look like if this plan comes to fruition?
So, Dom, that's exactly what we're looking at. So from the very beginning, we didn't think 3.5 trillion was the number. We've always been in the $1 to $2 trillion range, but we're looking at it being on the higher end of that range, potentially 2 trillion. And partly because there's a real need to keep all the liberals in the House caucus on the vote for this package, and not just this package, but the fiscal infrastructure package, which comes first.
So let's handicap this, because you mentioned the House and we mentioned the Senate as well. This is tight, no matter how you slice it. The Senate, you can't have any defections in the Senate right now to get anything done here. The House is only 3 votes at this point right now in terms of the swing that you need or can afford. What exactly has to be done to appease the progressive Democratic side of things and those moderates who are trying to get something more moderately priced passed through this market?
So that's the tightrope that Nancy Pelosi and Senator Schumer have to walk. And it's not just about Senators Sinema and Manchin in the Senate, which you hear a lot of press about, but it's also about the House members from high tax states like New York and New Jersey who really want SALT relief. So we really see SALT as a sweetener that could really allow some of the moderates to put a little bit more into the package to get closer to the $2 trillion range. I mean, you saw Congressman Gottheimer say when it first came out, no SALT, no dice. You also see that House Ways and Means Chairman Neal has recently said, look, I'm looking to put SALT in our final package, even though I don't have it in my initial mark. And then, but then on the other hand, you have fully reinstating SALT costs almost $600 billion. And that's almost unpalatable, because if you do that, you're going to have to raise taxes elsewhere, which moderates won't want to do, or you're going to have to forego some of the social spending that the moderates want to do. So it's a tough road to hoe.
Okay. We're in the New York area here, so many of us, myself included, are part of this picture. It's fairly bipartisan, right? Republicans and Democrats in some of these states that have higher relative tax rates are trying to campaign for SALT tax relief. Meanwhile, progressives, perhaps like Representative Alexandria Ocasio-Cortez, Senator Bernie Sanders, view it as helping the wealthy people out. How exactly then do you reconcile that voting situation and ultimately get some kind of a deal passed when you can't have any real defections on either side in the House or Senate?
So you've hit the nail on the head. The problem is, even though you have Republicans supporting the concept of SALT, you're not going to get their vote on the reconciliation package. So the negotiations really between those on the moderate wing of the Democratic Party and those on the progressive wing. And the question is going to be, what do the liberals really need to allow there to be a SALT? So if you look at it, they're going to need all the different packages with respect to child tax credit, paid family leave, all the main parts in their package, but they're also going to need all the environmental things that didn't make it into the physical infrastructure package. So look, this is not a time, this is probably the toughest job that House Speaker Nancy Pelosi has had. Normally what you would do is you would just satisfy the progressive wing of your party by passing a huge bill in the House that you know is not going to get passed in the Senate. But there's been a lot of movement among the moderates in the House saying, look, I don't want to take that bad vote into the House unless I know that the Senate is also going to take on the provisions we're voting on in the House.
Andy, I mean, one of the things that your clients have to be asking about right now is whether or not some of those tax rates I mentioned before, the upping of the capital gains tax rate, the high end of things, as well as a possibly 40%, top tier marginal rate for some of the highest paying taxes out there. How exactly then do markets or the economy react if we do see a move higher in the top end of both capital gains and individual marginal tax rates? Do you think that the markets will handle that in stride, or do you think it's something that will derail the market rally we've seen?
So at Invesco, we've already seen or already looked at this as we expected all the things that House Ways and Means Chairman put out there. We expected the corporate rate to go from 21% to somewhere between 25 and 28%, which it did. We expected the individual rate to go to the top end, almost 40%. And we expected cap gains to be anywhere from 25 to 28. So there's nothing really new here. What we're really looking at is the size. Is it in the 1.5 to $2 trillion range, or does it get bigger than we thought it might be and move up to the 3 trillion? We're still on the lower end of that, on the 1.5 to 2 trillion. If it moves to 3 trillion, which don't really think it will, that would be a newsmaker.